I want to broaden out the conversation with our closers panel now. Jamie McKenzie, Managing Director of Futures and Forex, is with us. Alex Coffey, Senior Specialist on the Retail Trading Desk at TD Ameritrade as well. First time on the panel. Welcome, Alex.
Thanks.
And we also have Charles Moon rejoining as the Senior Market Strategist of Equities at Prosper Trading Academy. All right, Charles, get us started. Ross pointing out here, he's a bull. He likes the stock. He likes Elon. But even he told us, look, one thing that I really liked about this last earnings were Elon's behavior on the conference call, the apologies and more. Does this seem like he's on his best behavior?
Yeah, you know, it's a stark contrast from previous calls where he was very combative and almost insulting. And, you know, we're at this point now, it was actually talked about. It was like a main point of topic when they talked about the earnings. It wasn't about the actual sales and the guidance of sales. It was about how Elon was acting.
Sure.
And so that was, a very positive, you could say from the chart side, it's a very positive. Investors were buying in, traders were buying in, stock flew up. I mean, that day's trading range was like 36 points. So it was on almost 4 times X volume for that day, which is typical for earnings, but instead of Tesla dumping, it was rallying. It was a gap and go type of day. So it was pretty strong, and that type of sentiment from the streets was welcome. Clearly, it was welcome.
The stock is now up 11.3% after resuming trading. He tweeted this, JB, and then he even put a price target, said it's 420. The stock jumped 8% right after. We know that he's got this ongoing battle with the shorts. I mean, we just saw his comments from the conference call about how unfairly he thinks he's treated by the shorts. And then the company's halted. They put out a statement, and it resumes trading. Look, I'm not a regulatory expert, but this has got to be tough it's murky ground is clear, and objectively murky ground for CEO to tweet this out without, first halting this, alerting the powers that be, et cetera. So is he getting carried away with this? I mean, is this what you want to see?
I think he's absolutely getting carried away. And I try never to talk in absolutes in trading, but when you have a CEO of a company that clearly has an issue with the analysts and how they look at it, knowing that there's potentially $2.5 billion in additional financing that has to come through the door, most likely, I think everybody agrees with that in the fourth quarter, and something comes out and says, hey, you know what? Let's go private. Let's do it at 420, which is, a significant premium of your share price. And oh, by the way, Let's not forget, I own 20% of the company, and it'll be a $70 billion valuation, which would make it the largest company ever to get taken private. So there's a lot of different hurdles here as a trader, and I would even think as from a regulatory stance, I would have some concerns when a CEO comes out and makes that definitive of a comment with a price point in there as well, because really what it's done is it set expectations in the marketplace. And now what happens if these expectations are not met? What's the impact back to people who have now jumped into this stock at this point? So I think there's a lot. You said it's murky, but it does make me very wary as a trader and as someone's watching what's going to happen with the rest of these customers or the rest of these companies. Are they going to start to follow suit here?
Well, we just heard from Ross Gerber, Alex, who is more on the institutional, one could think of as an institutional investor, but this is a hugely popular company for retail traders. I mean, one of the most traded here and elsewhere.
Absolutely, yeah. This is definitely a stock that we see our clients calling in on all the time. Lots of eyes on this one. And so it's interesting to see this. I mean, this literally broke today.
Are the phone's just off the hook on the trading desk or what?
Surprisingly, not as much as you'd think, but definitely, there's definitely eyes and ears on it.
Happy ones, I guess. So, we've talked about this before. This company is about not just, the fundamentals, of course. It's about Mr. Musk. It's about his role. And here's a stock that now becomes very volatile on a day like this. You look at this and what's the catalyst for this company? I mean, is it going to be the fact that he can just send out a tweet, the stock jumps 10%? I mean, we still have 2 more quarters to go where they're supposed to be showing profitability.
Right, and so if we're looking at this in particular, I think this is actually potentially a positive. This all would go through because it takes him away from sending those tweets, getting in arguments with the analysts, and allows him to actually focus on his company like he does with some of his other ones like SpaceX,
sure.
and actually focus on innovation, which I think a lot of people are actually investing in this company for.
So, all right, Alex is going against the grain here, and I like it because this is what Ross Gerber's point is as well, which is that you have an unforgiving sort of environment of short sellers, very high shorts, right? Everybody is going to talk their book in this case. So my question, though, is when Elon says it's unfair, Charles, I mean, isn't this the point of efficient markets and public markets, that there's going to be people betting against you and people betting for you? and then the market will decide. You can't have it both ways, right?
Right, and it to me, it's more about he takes it personally when people are trying to short him, right? He's, I don't want to call him a savant, but he basically is a savant, and he believes that he should be right. And, he's proven when he's been counted against. We're talking about from, PayPal to Tesla and SpaceX, and, he's saying, with people doubting him that it can't be this way or it'll never be this way, and he says, yes, it can. So when people go against him monetarily, meaning they're shorting against them, he does take it personal. And that's really where it comes from. It just seems like it's a personal stance as opposed to a fundamental stance. Now, that price point, that buyout price point, how do we validate that valuation? How do we validate that actual price? Because this is a company that doesn't sell many cars, that burns cash quarter over quarter. We're not talking about small cash. You're talking about them raising billions every quarter just to keep the doors open, just to actually fulfill orders that people have put money down on, and they've used that money to help the production, and production's lagging. So
we'd be talking we'd be talking basically $40, $30 above its all-time high. JB, I mean, that's a pretty sizable. We also now know essentially what the CEO thinks his company is maybe worth, one could argue. There's a lot of information to process here.
No, absolutely. I mean, look, as you're sitting here, my issue with it is you chose to come to the public market to get your financing and to participate. And after that time has occurred, when the market has spoken, in some cases, you have now chosen to say, no, I don't want that anymore. And now I want to bring it back. And the question ends up being is there have been some questionable deals, when it comes to Tesla with, the acquisition of Solar City and so forth, and people saying, why are we bringing these pieces together?
A lot of people didn't like.
Absolutely, right, and that's still went through. And I think sometimes you go to the public world and you say, I want to do it this way. Well, guess what? You have to then deal with the rules that are in place. If you want to be a private company, and I'll use Uber as a perfect example. Uber has chosen not to go public so far so that it can do with how it spends its money, how it wants, and how it focuses its efforts. that's a much different thing than it is with you get here with Elon. And plus, when you're talking about the tweeting thing, again, overall, when you're tweeting out these specific numbers, this does give you information on what people think.
Yeah. Alex, last thoughts on this? We're going to break in just one short minute.
Yeah, I mean, it's going to be interesting. I like it for Tesla because if you look at it as a company that's innovating, it allows them to focus on it, and it's less, quarter-to-quarter numbers.
Doesn't have to answer, at least in the Twitter sphere, but who knows if the buyout comes with a Twitter stoppage. We'll see. All right, closing bell is just about 45 seconds away. We'll be right back with the closers panel on the TD Ameritrade Network.
Feel that? That's the beat of global markets, the rhythm of the world. For most, the cadence of today. To us, the pace of tomorrow. It's people and machines uncovering opportunity. Cloud computing providing endless capacity. Blockchain making transactions safer and faster. New markets born where they weren't before. With ingenuity, technologies, and markets expertise, we create the possible. And when you do that, you don't chase the pace of tomorrow. You set it. NASDAQ. Rewrite tomorrow.
Welcome back to the TD Ameritrade Network. Closing bell at the NASDAQ market site with a overall good day for stocks, bad day for long volatility holders. VIX drops below 11 to 10.9, closing at the lowest level that we've seen since February. Point that said about 1 billion times a day, so we will leave it at that. The Dow Jones mid 24,000s in the upper range, 24,732. The S&P 500 just pretty close to those all-time highs, ending the session at 2859. Russell also on the upside. You mentioned the VIX, the 10-year yield moved a little bit higher today to 2.97%, but still below that 3% level. All right, we got a bunch of earnings after the bell. We're going to put the Tesla conversation on hold. We've got earnings that are coming from Disney, Snapchat, and more. We want to welcome back in our closers panel, J.B. McKinsey, Alex Coffey of TD Ameritrade, and Charles Moon from Prosper Trading Academy. Charles, the market here right under the highs. How do we get here? Did it kind of sneak up, given that there wasn't any massive 2%, 3% days on the upside?
I hate to say it, we're back to normal. Tariff news, the FOMC news, 10-year above 3%, none of it matters anymore. We're just ignoring it all, shaking it off. Last week was a great example how we finished off the week and how we're drifting up here. I believe trading volume in the SPY on Friday, Monday, Tuesday is well below the 50-day average. And it's that summertime trading, and it's just sellers are like, okay, here we go again. We're going to step out of the way, and buyers are just buying. They're not aggressively putting risk on like we've seen in the past, but we're seeing that the fear is starting to dissipate, right? The worrisome. So it just, to me, it seems if there's going to be any catalyst, it's going to be political. It's going to be collusion news, and that'll be it.
Well, hold on. Now that you throw the word out there, I actually brought this up this morning because I basically had a list of things that have changed, things that haven't changed, and the things that haven't changed are kind of those risks, right? Which is the tariff resolution. Yes, there's been some progress made with countries, but the big one out there is China, and that's still as murky as it's ever been, I think. You've also got the prospect, the risk potentially of inflationary numbers. It hasn't really budged the bond market yet. That's still out there. And then I think we don't talk about it because we don't talk about politics, but there is a big event catalyst out there that could move the market either way, which is resolution in the ongoing investigation. So you're basically saying beyond just the tariffs, there's still political risk, obviously.
Yeah, unless there's something absolutely surprising regarding the tariff front, I feel that's a bit baked into what the market conditions are. Yeah. I believe that it would have to be something earth-shattering,
which brings you to the Mueller investigation.
Yeah, actual charges being filed against the President of the United States. That would be earth-shattering. But
VIX at 11 probably wouldn't be what we see on that day. Alex, VIX at 11, though, this is starting to kind of shape up more like a January market than it is an April market, which was very much tariff concerns, peak earnings concerns. It's basically kind of being reminiscent of that environment we had where, as Charlie puts out, nobody really was worried about this stuff.
Right, and it's interesting because we saw in February what happens when that unwinds, and it seems that the markets kind of shrug that off now. And we're seeing that when that tariff news or those trade concerns come out, maybe we sell off a little bit in the morning, but we're coming right back up. But a lot of this is on the back of really, really good earnings. I mean, just looking at some of my numbers here, I have 80% of the companies that beat. It's on track for the most since 2008. We got corporate earnings over 24% growth, as opposed to what they were expecting at 20%. So there's been a lot of good numbers coming in too.
Yeah, 8 out of 10 companies, a little bit more, it's like 84 from Bloomberg we saw this morning, have been surprising. And then the revenue side as well, Alex is talking earnings, JB, but the top line, 10%. I mean, you got to go back to about 2008, 2007.
Yeah, I mean, I think this goes back to even the conversation we were talking about consumer confidence, right? We're all-time highs. People feel good about the economy. They're using their money to spend. You're getting ready to go into back to school season. So you've got all these sort of, I would say, these economic tailwinds really pushing along the way where, as Charles says, right, no one's really worried about the 10%, or sorry, 3% in the 10-year. No one's talking about that. No one's really talking about whether or not there's concern with the flattening of the yield curve or this strong dollar. So I do think as you're looking at it right now, the question ends up being is, you're kind of getting what we sometimes call that summer doldrums, that summer trade. You're really kind of hitting it right now in full force here because you get sort of the 3 weeks. Europe kind of starts to go away. Now all of a sudden the U.S. and you go into the end of the year into Labor Day. But there's some big ticket items coming through at the end of August that we need to remember, right? You do have the tariff talk coming through. You've got the talk of another interest rate hike coming through the door. And then obviously you'll be going into that last quarter of the summer. So a lot of big numbers just kind of waiting maybe 2 weeks away that kind of lets us take a breath right now.
You're talking about the purported deadline for when
Correct.
we will enact these tariffs on China.
That's correct.
So will that day not be the political risk catalyst that falls, Charles?
Maybe if they fully extend, and what are they saying, 500?
500, yeah.
2 to 5.
$100 billion figure.
I mean, he's mentioned 2, he's mentioned 5. I guess if he surprises and levies more or levies at the absolute most or, more than expected, I could see a downdraft, but I just feel that it would turn into a buying opportunity, which is what we're seeing now. It just seems like anytime the market even gaps down a little bit, it's just, we got to get in now because there's short-term value. We talked about Facebook and Google last time, and we've seen how they perform since then. People are buying into these names. Apple didn't perform that great today, but Apple's been pretty strong, and we're starting to see the money coming back into the bigger plays, the bigger yield plays, people that are expecting huge returns and consistent returns, and it's no more fear, right? We saw a lot of risk off coming off, second quarter, even start to third quarter. Last year in August, it was absolutely dead. We were trading on inside days, small, tight ranges to, at the start of August this year, now we're seeing extension. We're racing for new highs. They're trying to test the highs in the SPOOs. They're trying to test the highs basically across the board, and people are putting risk on without any concerns. It's like almost stopless entries, which is...
Someone check the short VIX trade to see how that's adding up. I think it's a little bit quieter, at least judging by the ETFs that are still pretty much dead. But JB, jump in on this, because we've been talking about this quite a bit, right? The push towards these levels.
Yeah, no, the one thing I think would be interesting, and we kind of haven't been talking about it, we've done a little bit on the sides, is that the yuan is really being depressed very, very hard. It's down over 6.5% since the tariff talks have been really pushed in there. The dollar continues to race up. You just had China put limitations on the shorting of its currency. Yep. When you start to look at some of those things, that's the one piece, I guess, as I was thinking about it over the next couple of weeks, that could be a very interesting story. If this U.S. dollar continues to race up and puts more pressure as these talks are going on, that could be that sort of that first crack in the foundation that maybe the market it doesn't see right now, because we're so focused on the last part of earnings and then obviously what's happening in this tech rotation and this really big power move by the FANGs.
Yeah. Alex, there's, I think, a point here within JB's statement, which is that maybe the market is not crazy to be at VIX 11 with the tariff stuff. Maybe they just decided, right or wrong, that China's going to take the hurt and U.S. earnings are enough to propel whatever pain we get from our own tariffs here.
Yeah, and so conventional wisdom says that the country that has the least to lose in a trade war is kind of the one that wins. And the U.S. is the world's largest importer. Yeah. So the market could be looking at it that way, and we have had a lot of really strong earnings growth.
The question is, if we didn't have the numbers that you just gave us, would this market be as comfortable as it is right now?
I think the earnings has definitely helped it. I think obviously we have a lot of really good numbers. We've had strong economic data as well. And so that's definitely kept it afloat, but it would be interesting to see, like you said, if we didn't have these numbers, would it have held up as much as it has? But we're testing new highs.
Yeah. The fact that the Chinese tech kind of started rolling over first, so I'm going to get into the tech, and then we want to talk specific sector while you're here, Charles, about gaming. So we'll work our way into it. Chinese tech started softening up first before U.S. tech. Now, one could look at the tariff conversation and say, that's why, and the overall economic slowdown that's happening there. Or you can look at that and say, look, Tencent, Baidu, these companies were weakening up, and the appetite for that type of risk for those companies faded, and it's just eventually going to work our way back here. Maybe that's why we saw some of our social media names start hurting. What do you think?
Yeah, if you pull up Tencent on a daily chart, you'll actually see that weakness in where they were at the 52-week highs and basically how they've been trending down, and Baidu is very similar. Now, Baba actually is starting to catch a little bit of a bid. People are trying to buy back into Baba. But the huge flyers of last year, like WUBA, W-U-B-A, and Sina, S-I-N-A, and WB most notably, these stocks you're seeing basically pure liquidation. It's been on that tariff news, and it's, from a trading standpoint, trending down with strength, right, with a lot of momentum. They've had a bit of a consolidation. They broke out of that consolidation to the downside, and people are still trying to buy in because they probably bought into these names last year or the year before and gotten huge yield, especially off of WB and Sina, but I just don't feel that's going to be nearly as a factor, especially if the U.S. is combating China in these tariff talks and they're still trying to go back and forth. It's going to weigh more on these Chinese tech names as opposed to the U.S. tech names. Yeah.
JB, is there a correction that then does the market have to basically do the flip side if this was, an issue of not necessarily a tariff-driven trade, but some kind of a, growth slowdown, a tech slowdown? Because then you might look at our market and say, wait a minute, if, the same sort of theme is going to play out in our own tech as it did with Chinese tech, then, why are we rallying to NASDAQ to new highs, things like that? Basically, what does this market look like if this has not been about tariffs?
Well, that's what's interesting to me, because if you look sort of at the bat, right, you said Alibaba, you have Baidu, and you talk about Tencent, is their growth has still been really strong. The difference with it is they're completely located within the borders of China, and they're trying to now branch out internationally much more, versus I would argue with the FANGs, with the Facebooks, the Alphabets, et cetera, and the Netflix, have already had this U.S. base, and now they're expanding out internationally. So it's interesting that the tech sector has really beaten down those traditional bat stocks, those Chinese stocks, so much more when they have interesting opportunities versus the FANGs. I mean, going to where I think you're going next here is with Tencent specifically. Tencent Games is one of the largest producers of games out there, a huge provider, and Fortnite is the game. I just was hearing how Fortnite has coaches now.
Yeah,
Oh,
tutors.
yeah.
You got to get
Tutors.
Fortnite tutor if you want to be cool. One thing here before, and I want to close out on the gaming conversation, but Alex, bring Apple into this because I thought Apple was an interesting sort of wrinkle in this either tariff or tech conversation because Apple's got exposure to the tariff side with China, potentially, and then obviously a tech giant, but yet in their earnings, we didn't really hear much about tariffs. They said, look, Tim Cook said, we don't like them, but right now, we're doing just fine despite all of this conversation.
No, and that's a really, really good point. So yeah, he completely just avoided it altogether. I think they had a really, really strong quarter, and they've gone to a new high for a $1 trillion company. I mean, one of the most interesting things to me was, they're so reliant on the iPhone sales and how they're starting to diversify that a little bit. So you saw the Apple services, which you got your Apple Pay, it's grown 40% versus the rest of the revenue only growing 17%. So how they're diversifying that, I think, is huge.
I think you're spot on right there. You see just how this quarter sort of broke down in terms of some of the growth on the right versus the actual percentage of the revenue. Big numbers for iTunes software services. Charles, connect this to our final sector on the gaming side. Are people using, Beats for games, or is it all about Turtle Beach?
It's definitely Turtle Beach right now. The Beats, not so much, but when we talk about Turtle Beach, ticker symbol is here, HEAR.
Yeah.
I've been tracking the stock since it was around $4, and it actually randomly came up to me on a scanner. I just saw just an immense amount of buying. I believe the total daily volume was like almost 50 times over the
Probably
normal.
a couple months ago, right? Because that's when
Right.
it kind of first came onto the scene.
Just
Nobody knew
before
the
May.
stock.
Right.
And then here, obviously, it just popped up.
Yeah, and in May, it's really when they started exploding onto the scene from 4 to 9. And I heard on their last earnings call, not the most recent one, but the one previous, about their growth, about their partnership in esports. And they specifically named Fortnite as being a big driver in accessory sales. And next thing you know, within a month or month and a half, they're trading over 22, and then they just peaked over 32 on Friday, and they just had earnings, and
Look, there's the
guidance
numbers.
was insane on earnings.
Sales growth was massive in terms of the beat. Alex, I'm a gamer though, and I see the excitement of Fortnite. My friends are still playing it, but as a gamer, I know that there are certain franchises that have been around for decades, and there are fads that come and go. Is a stock like here just a crazy bubbly momentum play, or is this a sector that's got enough growth to justify the guidance that they're giving?
So what's interesting, if we step back, we look at esports as a whole, it's about a $100 billion industry or so. Of that, $2 billion of that is actually just headsets.
Huh.
So back when I played video games a little bit more, maybe
Yeah,
high school and
back when,
college,
back when.
when I had a little bit more time. I
It's okay. It's a safe place. This is a safe place, Alex.
Tuesday.
when you never said, hey, I got a new headset, you said, I got a new Turtle Beach, or does that guy have Turtle Beaches? It's almost like the Kleenex brand is for tissues.
Yeah.
It is the name for what those
I was
headsets
thinking
are.
like Nike or Adidas for like traditional sports, but I see your point. JB, can we start to think about esports as being a big enough business to justify, or rather not justify because it exists, it's there, right? But to let a market like here or Turtle Beach thrive. This is now a tangential play to an industry.
Yeah, I think what you see here is the fact that this is an area that has tremendous growth, tremendous interest. You've got youth, you've got older, you're hitting across the diversity or the demographics, and that's what you want to see as a company. I think the question ends up being is who's going to start trying to chip away at some of this area? Does it end up being that Apple tries to do something with Beats or combine something? There's another brand that tries to jump through. But when you hear the numbers of $2 billion in the sales of these headset units out there, it's amazing. And you think about what's being built out. We haven't even gotten to the point of where you can stream into the cloud and those next generation pieces. I think there's a lot of upward momentum here potentially. The question is can they withstand all of the other competition that's going to inevitably start to jump into this space?
Yeah. So Charles, when you look at this company, and we're talking about, so a lot of people might not know, the Turtle Beach company that we're talking about, but this is a sector that has been hugely rewarding, gaming as a whole. EA, Activision, Take-Two. The trade has started to break down this earnings season a bit, with Take-Two really the only one giving good guidance from the developer side. But are you interested in the space as a whole? Does a company like Turtle Beach can keep up this amount of growth?
Yeah, so that's kind of the million-dollar question, right? After the huge jump in price point for here, I just feel at this point right now, any positive news moving forward, it's pretty much baked in. The upside is very limited, and you're more subjected to the momentum downside. So when we start seeing weakness in the name, people start panicking, taking risk off. So it may be just an absolute momentum play. It's the only way you could really, explain a gaming accessory company, pretty much quadrupling in price over the last few months. Like it was a biostock name, like they actually cured Alzheimer's or something. So it's
that kind of move, yeah.
Right. And now, do I believe in esports? I do. Ask Google, ask Amazon what they think. YouTube videos and YouTube views have skyrocketed. That's why I'm such a big believer of Fortnite, because how many people in terms of a general audience they're bringing in. And with Amazon, they saw this coming a mile away. They bought out Twitch. And Twitch right now, in terms of live views, is peaking at levels of major sporting events like football and baseball and basketball. Yeah. And in some regions, they're absolutely surpassing those numbers. So when you see this, it's when we talk about sports, it's usually centralized in North America. But when we're talking about esports, this is that one product that globally is drawing a lot of interest and is just starting to grow. And you're starting to see a lot of institutional money flooding in to this particular arena right now.
All right, Charles Moon, we'll leave it on that note. Great topic, one I love to talk about, and fun discussion there of Tesla gentlemen as well. Jay McKenzie, Managing Director of Futures and Forex at TD Ameritrade. Alex Coffey, Senior Specialist on the retail desk at TD Ameritrade. And Charles Moon is the Senior Market Strategist of Equities at Prosper Trading. Charles, great to have you back.
Thank you for having me.
All right, up next, it's time to talk earnings. Snapchat. Earnings are out. It's a buck higher. A little bit of a mixed report, so we're going to dive into it and check out the charts for this company going into the report this afternoon. Looked like a guide for revenue that was roughly in line, but a drop in the daily active users. So what's more important to the market? Is it going to be the profits and the revenue, or will it be the amount of folks on the actual app? Stick around. Michael Keeley is back with us. We will take a look at Snapchat, Match.com, and Disney. Buckle up. Big earnings names. We'll be right back on the TD Ameritrade Network.